doing well. So today we're going to do a weekly market breakdown. I'll tell you exactly all of the pairs that I'll add to my watch list here as well. And as always, if you're new to the channel, a sub would be really appreciated as I do provide daily educational content that will help you in the way you trade as well. And I'll also answer all questions in the comment section for you as well. As always, if you enjoy the content, just smash that like button for the YouTube algorithm and let me know down in the comments exactly what it is that you would like for me to cover in my next video. So we're going to speak about the NFP data that got released last week and how it could impact the US dollar this week. So clearly, the only positive that came out of here, we saw a lower interest unemployment rate. The unemployment change, or the number of people that were hired last month, was not achieved, and the average salary basically just went up over there. One thing that we do need to take into consideration with all of that, if you remove all of that, the NFP data was still negative. Then, if you remove all of that, just keep one thing in mind that the US consumer debt is now sitting at 40 billion, and people are still loading credit cards just before the interest rate hike starts, which is in March and not April. The only reason why Powell came back in December and said we're going to move it to, uh, why he moved it so closer was because he was waiting to get re-elected for his position. And when he did, he actually came and said, you know what, we are not going to wait until April. We're just going to start hiking interest rates in March. Now, what does that mean? That means that all of the people that consume debt at a lower interest rate, okay, have probably, they are in debt. The interest rate goes higher. That means they need to start paying more for whatever it is that they've accumulated while the interest rates were lower. So expenses increases, and that's how the inflation cycle begins. So just keep that in mind as well. So we know we got a negative NFP, and we know that we've got inflation on high yields for the US dollar. So we're gonna start over here with the USD CHF. So here on the monthly time frame, I spoke about NZ USD CHF as well, and I said, we could probably expect the market to go and fill in that week. But what we have over here, we can see on the monthly time frame how the market is stuck within this range. So there's definitely a possibility for the market to continue in this range in the long term, hopefully. But here on the weekly time frame, what do we have? Here from a weekly perspective, we can see how the market had printed this W for this information. By definition, the market is supposed to test the previous level of support that got broken, became resistance, and it's now once again testing it as support. Now, because of the data that we got over there, we can definitely expect some short-term continuation to the downside for the USD CHF. We also have this impulse correction. So if you take your Fibonacci there from the high to the low, you can see how the market had tested, rejected the minus 78.6 as well as this minus 61.8 as well. So we can even expect the market to continue higher to go and hit this low over there to create a lower low. Now now here on the daily time frame, what do we have over here? Now on the daily time frame, we can see how the market is currently testing this strong level, not testing, but it had actually broken below that. So there's a level acted here as a level of support, came back as a resistance twice. The market then broke back above that level of resistance, came back, tested it as support, and we had a daily close and break below that level. Now the best way to approach the situation is to wait for the market to pull back to that level, come back, and then start looking for more sells to the downside. In doing so, the market would then also print this head and shoulders pattern, which is concerned a bearish pattern in the market as well. Next in line, we've got the Nasdaq 100 over here. Now, starting on the monthly time frame for the Nasdaq 100, what do we have over here? Now, on the Nasdaq 100, we have this market that had broken below that level of resistance, and it's now testing it as support. Now, on the weekly time frame, what do we have over here? Now, on the weekly time frame, we can see how the market is currently testing strong level of support over here. Now, if support does not hold, then it's goodbye, Mirai. But we must always take one thing into consideration. Overall, the Nasdaq has been bound within this range, so we can definitely expect a slight pullback because we've got this information as well. So we can definitely expect a slight pullback maybe to the neckline of the information before we can see this market go lower. Now, on the daily time frame, what do we have over here? Now, on the daily time frame, you can see how the market had created the structure over here. So by definition, the market is now stuck within this range over here because this level over here is now acting as a level of resistance because this was once support got broken and is now resistance. The market stuck between a level of support and a level of resistance there as well. Now the best way to approach the situation would be to wait for the market to go for a clear break above that level. Then on the retest you can start looking for some buying opportunities. In doing so, the market would have then also created this inverted head and shoulders, which is considered a bullish pattern in the market as well. If all goes wrong, then if the market does break and close below this level, then on the retest, it's time to sell the Nasdaq 100 as well. But as traders, we have to be reactive and not predictive and learn to adapt to the ever-changing market environment. But from where I'm sitting, I'm still quite bullish on the Nasdaq 100 for the short term, but in the long term, we can definitely expect the Nasdaq 100 to fall. Now, you're on gold, what do we have over here? Now, on the monthly time frame, we can see how gold had been also stuck within this range. We had this massive pullback that came through here as well. Also, we had this massive impulse, and if you take a Fibonacci there from the low to the high, then we had tested the 61.8, and we've been waiting for the market to continue higher as well. We also spoken about this inverted head and shoulders pattern that the market had long created, where we expected the market to continue higher as well. Now here on the excuse me, here on the weekly time frame, now we can see how the market had broken above this level of resistance and came back, tested it as support. The market also printed that candle with the long wick, and it actually went to fill in that wick. So we're quite bullish this week on the on gold as well. If you take a Fibonacci there from the low to the high, you can see how the market tested and rejected the 61.8, also known as the golden ratio. So some upward momentum is still expected there as well. Now on the daily time frame, so we have taken some buys here at the price when the market was sitting at that level. But here on the daily time frame, what do we have? We can see how the market had broken below this level of support, which is now turned resistance. So there's some contradiction between the weekly and the daily time frame. So the best way for us to approach the situation as well is to wait for the market to break and close above that level. Then on the retest, we can start looking for buys. In doing so, the market would then also print this W formation, which is considered a bullish pattern in the market there as well. So I would not advise you to go in and just buy this market cap this week. Wait for a daily close above this level, and that should make way for you to look for potential buying opportunities there as well. Situation we got here on USD. So you can see here on the monthly time frame, the market printed this massive impulse. After an impulse, you expect a correction, and taking your Fibonacci there from the low to the high, you can see how we did not have a pullback to the 0.382 of the Fibonacci taken on the monthly impulse. So there's still a good possibility for the market to come lower, but the best way to see which level the market is going to pull back to is to look for the Fibonacci level that lines up the best structure that we have over there. And I can see how this level acted as resistance, so we can definitely expect the market to come back, hit that level as support before potentially continuing higher. Here on the weekly time frame, what do we have over here? We can see how the market is currently approaching the strong level of support. So it would not be a good idea for us to just go into this market and start looking for selling opportunities there as well. Now, here on the daily time frame, what do we have over here? Now, on the daily time frame, we can see how the market is or has just printed this information. After the information, they expect to pull back to the neckline before the market continuing lower, which is going to give us an opportunity to look for potential sorting opportunities. So the best way to approach the situation is we're going to wait for the market to go and go slightly lower, print that equal low, come back to test this neckline of the information, and then from here we're going to start looking for some selling opportunities. Also, if you take a Fibonacci there from the low, from the high to the low, we can see how we will get a 0.50% pullback, which will be a 50% retracement of that massive impulse. The situation that we got here on GBP USD, which was requested by one of the members, was excuse me. So here on the monthly time frame, we can see how the market had broken above the strong level of support. Support got broken. It now, it was then the resistance. Resistance did not hold, and the market. You can see how the market's continuing higher. I also explained when after this candle was printed, I explained why we expect the market to pull back to this level, and before continuing higher, there is a good potential opportunity for the market to go and print an equal high, come back, retest that level, because we would like to see the market complete that head and shoulders and also get a pullback to the 0.382 by taking off Fibonacci on the monthly impulse as well. And yeah, on the weekly time frame, what do we have over here? Now on the weekly time frame, we can see how last week the market had broken and closed above this level of the resistance or support that got broken became the resistance that we had over there. So good opportunity for us to continue looking for buying opportunities there as well. Now, one thing that we need to take into consideration is that we have this candle with the long wick. So normally when you see a candle like that, you expect the next candle to fill in the wick. Like you see how the market went there, we had that wick and the market went to go and fill in that wick. But as traders, we have to be reactive and not predictive, and we need to learn to adapt to the ever-changing market environment as well. We have the structure that the market had broken, which was a level of resistance that is now turned support. So there's two ways to approach the situation. First thing would be for the market to go and hit that level, then start looking for buying opportunities, applying the rules of the strategy that you have. Alternatively, if the market breaks and closes below this level from a daily perspective on the retest, you can start looking for selling opportunities as well for the market to go and fill in that daily wick there as well. Here on the USD JPY, what do we have over here? Now I was talking about the USD JPY when the market was sitting at this level, explaining all of the reasons why we were looking to buy this market there as well. If you've missed it, you can just refer back to the previous videos that I've done as well. Now the market had broken around this level of the strong level that we had over here. So there's definitely a pullback expected to this level before you can expect this market to continue higher. Taking off a Fibonacci there from the low to the high, we can see how the market pulled back to the 0.382. But the expectation is for the market to pull back to the 61.8 because it's the base level that lines up with structure that we had in the market over there. Now, here on the weekly time frame, what do we have over here? On the weekly time frame, we can see exactly what we just spoken about now, is that we do have this strong level of resistance that got broken, which is now turned support there as well. And on the daily time frame, what do we have over here is we can see how the market is approaching previous level of resistance that got broken, which is now turned support. Now we can also expect the market to rebound from to reject that level. So taking off Fibonacci there from the low to the high, we can see how the 0.382 is the first Fibonacci level that we expect the market to pull back to after hitting that level before we can expect the market to continue lower and go hit that level of support as identified from a weekly perspective there as well. Again, as traders, we have to be reactive and not predictive and learn to adapt to the ever-changing market environment as well. So we can definitely expect a pullback to that level. Alternatively, if this level of support does not hold and we get a daily close straight away below this level, then on the retest you can start looking for selling opportunities as well. That's just an alternative method. So if the market does close on the daily below that level, then you can start looking for selling opportunities to the downside there as well. The situation that we got here on the Euro USD from a monthly perspective, what do we have over here, is we can see how the market is testing the strong level of support. Now after the market tests the level of support, we also expect a pullback as well. Now on the monthly, you can see how we got that overextended information, and after the market prints an overextended information, you know, expect to pull back to the left leg before the market continue lower as well. So there's definitely a good possibility for us to start looking for some buying opportunities to that level there as well. And you can see on the weekly time frame how the market is preparing itself very, very nicely for this W formation in the market also as well. Now, what do we have here on the daily time frame? Let me just give me 1 second. Sorry. So what we have on the daily time frame is we can see how the market is about to, or how the market had broken above the strong area that we had over there. So the market is printing this W formation on the daily, so we can definitely expect the market to go and make an equal high, then pull back to that level before continuing higher as we expected there as well. Definitely go for that level there as well, guys. I need to grab my laptop charger, otherwise it's gonna die and I will not be able to continue. Okay, I'm back again. It's not the kind of thing you want happening when you are doing a video for YouTube. But in any case, let's continue. So we can expect the market to go and continue that day as well. Come back, hit the neckline of the W formation for continuing higher. AUD USD here, starting on the monthly time frame. What do we have over here? AUD USD. So the situation we got here, the USD, is that we saw this market printed. Well, the market was testing this strong structural area as well. You can see how support got tested twice. So it is basically called a double bottom there as well. I can definitely expect the market to continue higher as well. The market broke above this level of resistance, tested it as support, and with that negative data again that we had for the US dollar next week, we can expect a pullback from this level here as well. Taking out Fibonacci from the low to the high, we have a 0.50 pullback. So definitely, well, the market tested and rejected that level there as well. Here on the weekly time frame, what do we have over here? We can see how the market last week had broken above the strong weekly resistance that is now turned support. So again, we can expect some continuation from this level here onwards there as well. Now on the daily time frame, what do we have over here? On the daily time frame, we can see how again we've got this contradiction between the daily and the weekly. So the best way to approach the situation would again wait for clear break above that level, and then on the retest you can start looking for buying opportunities for the market to complete that impulse correction and impulse pattern, and also to potentially print this inverted head and shoulders, which is seen as a bullish pattern from a technical perspective. The situation we got here on US30 is quite simple. We have a market that got broken below above a level of resistance, and it needs to come back to test it as support. Doesn't matter what it does. Now here on the weekly time frame, what do we have over here? On the weekly time frame, we have this massive impulse. So after an impulse, you expect a correction, and the way you measure that is by taking your Fibonacci there from the high to the low, and we can see how we had not a pullback to the 0.382 yet. So we can definitely expect the market to pull back slightly lower to that level as well, potentially breaking it and continuing lower. Now on the daily time frame, what do we see over here? From the daily perspective, we can see how we had this massive impulse to the downside. Now we can expect the market to correct itself before continuing lower. The market also broken above this level that we had over here. So market could potentially test that, but the highest probability would be to take a Fibonacci there from the high to the low, and we can see how we could get a potential pullback to the to the 61.8. So I'll add to the 61.8 to that level over there before the market does continue. Sorry, does continue does continue lower. In doing so, we could also see the market print this head and shoulders pattern as well, which is considered a base pattern in the market as well. Now, that is what I'm going to be looking at for this week. That was a mouthful. I wasn't expecting it to be so long, but yeah, it is what it is. So this is the setups that I will be looking at trading this week. And as always, guys, let me know down in the comments below exactly what it is that you would like me to cover in the next video. And as always, cheers, figures.